Hi everybody, it's me, Gregory Mannarino. How are you today? It is Thursday, December 21st, 2017. People, this is where we are right now. As I'm doing this video blog, stocks are higher a little bit. I mean, nothing to shake a stick at. And the market is kind of waiting. What is it waiting for? It's waiting to see what's going to happen here in the bond market. Again, as I am doing this video blog, bonds aren't doing anything. They're just about at the flat line. If you were to go to my website, traderschoice.net, you will see the chart I made for you and how it's reacting right now. I mean, there's a tiny bit of buying here. I mean, you can see just a tiny little green blip on that chart. But I think the market overall is kind of, again, just waiting. It's a waiting game in many ways. And in the video that I did, I think last night, I explained to you, stocks aren't going to go anywhere until the bond market figures out what it's going to do, or until traders and investors who understand the game want to see what's going on here with bonds. It's the driving force here. And understand, suppressed interest rates that we've had now for a decade has created an unbelievable environment of risk. In other words, people are trying to search for yield, and the only game in town is the stock market. This has been done on purpose. You have to understand that. The Federal Reserve has deliberately created this environment. They wanted to reinflate a bubble in the stock market. They wanted to reinflate a housing bubble to create a wealth effect. That's it. And there's going to be an awfully bad price to pay for this if yields normalize in any way. I mean, this is why the Federal Reserve has been nudging the federal funds rate ever so slightly in widely spaced increments, and how they're talking about unwinding their balance sheet or normalizing. Think about what that means. If they're saying they're going to normalize it, that means it's abnormal, right? You and I won't even exist anymore by the time, and I mean that in the literal sense, by the time the Federal Reserve normalizes their balance sheet at the pace that they're on here, it'll be 100 years. So understand, they have never had an exit plan. So the bond market is where you need to watch. You know that. And again, stocks aren't going anywhere. And there's nothing to buy. Look, I've been looking at everything here. I am waiting to jump back into an index here. SPY specifically, there's nothing that you can't buy it here. You can't go long here. You can't go short here. You can't do anything here. It's a waiting game. And that's how we need to play this. So throughout the rest of the day, keep your eye on that bond market. Gold and silver are under a little bit of pressure here. Just one more thing before I let you go. Tell me if you find this at all interesting. With regard to all of the action and whatever you want to call it, the insanity around Bitcoin here, how many of you find it odd that, think about this, when the CME Futures Exchange opened with regard to Bitcoin futures, Bitcoin topped out at just over 20,000. We've had a 20% pullback, 20% drop since that time. And this guy sitting right here have explained to you that if you follow those futures, although, look, they're the fanatics, they won't get it, no matter what you do, and that's okay. Let them do what they got to do. It's unbelievable. But as the futures were being bid lower, and they're being bid lower right now, go to the CME website and look at Bitcoin futures. Bitcoin has dropped 20%. Who said that? Oh, I did. That's right, I did say that. I also told people that if they would have listened to me, the Bitcoin fanatics, if they would have listened to me on this one, they would have been a lot better off. I told them when Bitcoin hit 19, 20 grand, they should consider getting out of it and putting cash into other things, or get out of it and wait just a minute for maybe a few days, a week, whatever it was, and then get back into Bitcoin when it dropped. No. They didn't want to hear that either. Greg is crazy. Greg doesn't know what he's talking about, really. Well, looks like I got this one right, too. So anyway, with regard to cryptocurrency, you got to look at other things now. Bitcoin's in a little bit of trouble here, especially with all the talk about creating inverse ETFs now, and other ETFs with regard to Bitcoin. Wall Street is going to capture this. It's already had its hand on it by the futures, and they're playing kind of a pump and dump game here. There's no doubt about it. How many of you out here also, I would love to hear from you on this, that the week prior to when the futures exchange started, Bitcoin took off. I think it went up almost 100%. It's bizarre. But yet, Wall Street knew that the futures was coming. I mean, it was being announced everywhere. So there was the pump, you got it? And then the 20% dump. Just to put a perspective on this, it's not just 20% in the leveraged, because the futures market is leveraged. So that 20% made a lot of futures traders here unbelievably rich without even holding a single Bitcoin. Not even one. I tell you, when Wall Street gets their hands on something, they know how to game it. You got to at least give them that, although they are the public enemy. There's no doubt about it. But without them, we'd be back in the Stone Age. They really got us all. People are saying, a lot of people, oh, this is it. This is the end of Wall Street. Really? What does that mean? That means no access to your bank accounts, credit markets freeze up, unemployment skyrockets, and we go back into a depression. That's what it means. So they got us, and we have to just admit it, but we can play the game too. Understand? That's what I'm trying to outline for all of you. All right, let's keep an eye on that bond market today. Not doing anything as I'm doing this. Stocks are higher. They actually opened up higher than they are now as I am doing this. But that bond market, everybody, including this guy that you're looking at right here, is waiting to see what happens in that bond market before I move even a single Fed note around. With that said, I'll see you at the summation at the end of the day. Over and out.